I learned the hard way that not your keys means not your coins. I lost my money on an exchange hack. Countless exchanges just disappear and take with them the whole savings of their users.
The worst category are the ones that are aware of the risk and what's happened before, but think that it won't happen to them and their exchange.
This is the core principle of Bitcoin, and that makes it so valuable. No one can take away your Bitcoin if you hold your own keys. But if you have it on an exchange, it might just disappear.
My onboarding into Bitcoin was you self-custody your Bitcoin. The curse was I just assumed that everybody else had that onboarding into Bitcoin.
Self-custody is like an insurance. You only need the insurance if something goes wrong, saying, hey, this will not happen to me, this will not happen to my exchange. That's exactly that which will get you into trouble.
Welcome back to the show. Today we're joined by Philipp, the co-founder of Lendasat, and I'm really excited to see where this conversation goes. All things Bitcoin-backed loans, lending against your Bitcoin, and perhaps some of the technicalities behind that as well. To get us started, what is Lendasat?
Lendasat is the brainchild of all products we've built in the past. In a nutshell, it allows you to borrow against your Bitcoin, meaning you can tap into the liquidity of your Bitcoin without having to sell it, or more importantly, it's actually in a non-custodial way. So you can borrow against your Bitcoin in a non-custodial way, meaning you don't give up your keys neither.
Cool. And you said it's the accumulation of a bunch of different things you've been working on. So do you want to go into a bit of your history and what that looks like?
I would love to, yes. So maybe let's go quite a few years back in the past. I learned the hard way that not your keys means not your coins. I lost my money on an exchange hack, and ever since I made it my mission to remove counterparty risk from financial products. And we started the first company in 2017 with a focus on trading, in particular cross-chain trading between Bitcoin and Ethereum, and Bitcoin Monero, Bitcoin Grin, and so on. And always the focus was to never give up custody of your keys. Moving forward a few years, in 2019, I think, we launched Bitcoin derivatives, non-custodial Bitcoin derivatives, which allowed you to bet on the Bitcoin price without having to give up your keys again. So you could say, hey, I bet Bitcoin price goes up, you win some Bitcoin, or you say Bitcoin price goes down and you win Bitcoin if the price goes down. But obviously, if the price moves in the other direction, you would naturally lose some Bitcoin. That product, unfortunately, didn't take off that much, mostly because of some UX challenge. But the fundamental core basis of a derivative, of a perpetual future, is actually a lending market. And you borrow something from another party to then give back at a different price in the future. And we then, straight from derivatives, jumped into Bitcoin-backed loans last year, so 1.5 years ago. Because this was the hottest topic, and it's so easy to understand. It's this buy, borrow, die idea of the rich people, where you accumulate a really, really hard asset which just appreciates in the price. It's much harder than the fiat you have around you, and you borrow against it. And the idea is you actually never sell it, and that has a few advantages. You keep exposure to the Bitcoin price, meaning if the Bitcoin price keeps going up, as we believe it will, you hold on that asset and you can sell it at the future price if you ever have to. And more importantly, you don't pay capital gains tax. Like if in most jurisdictions today, if you sell your Bitcoin, you pay capital gains tax. And if you live in a country like Australia, it's actually quite tax intensive.
It is, yeah. And before we go on, I've got a few questions that came up there, but you mentioned what got you into this space was that you lost some Bitcoin on an exchange. Do you want to go into that a bit more? Because I speak to a lot of people at the moment that hold their Bitcoin in an exchange, and some are somewhat aware of the issues of this, but they're not taking action because it's just the it'll be all right mindset. So
Yes.
Do you want to go into your story and tell us a bit more about that?
Totally. So I have a very technical background, and I got into the space more from a technical perspective than from an economical perspective. But I also traded on stock exchanges in like 2009, 2010, so quite a few years back. And then naturally, when I got my first Bitcoin, I thought, let's trade a little bit. I'm not saying I'm good at trading, but if you want to use your Bitcoin back then and today, you always have to trust someone else. Like you have to deposit your hard-earned money into a centralized exchange. That's what I did. I left it on an exchange which came warmly recommended by some friends in the space. They said Mt. Gox is the biggest exchange, most reliable. Just keep it on there. And then I think was it February or March or something, rumors started to appear that this exchange is doing some flaky stuff, shady stuff. And then April, suddenly I couldn't withdraw the money anymore. And then I was like, I understood Bitcoin from the technical perspective that yes, you can hold your keys, but I didn't understand that this is the core principle of Bitcoin. And that makes it so valuable that no one can take away your Bitcoin if you hold your own keys. But if you have it on an exchange, it might just disappear. And unfortunately, this has happened over and over again, like Mt. Gox, FTX, Celsius, BlockFi, countless exchanges. I forgot the New Zealand one, which disappeared a few years ago. Countless exchanges just disappear and take with them the whole savings of their users. You need to think of self-custody is like an insurance. You only need the insurance if something goes wrong. But for your car, you buy the insurance because sometimes it's mandatory and sometimes because you think, hey, I bought this new car and it's so precious. I don't want anything to happen to it. And if something happened, I want to get reimbursed. I want to be covered for some damage. Same thing with Bitcoin. It is the most precious thing you can own, like you can really own, and you want to have an insurance. You want to keep it in self-custody. You want to you want to manage your own keys.
Yeah, I couldn't agree more with you. And to double click on your journey and your experience, what actually was the process with Mt. Gox and losing your Bitcoins? Did you ever recover it?
We did get something back. I mean, the process is still ongoing. Don't ask me exactly what percentage we got back. Well, it was a cents on the dollar, so not worth mentioning it. But I mean, on the other side, I was actually nice because I wrote this money off years ago. And then after over 10 years later, suddenly we got a little bit back. But yeah, I wrote this money off completely.
And in terms of the actual process as a user, so from your perspective, just perhaps to put into perspective what someone might have to go through, what was the actual experience like in terms of finding out and the things you actually had to go through mechanically from the account side of things? But then in terms of your personal life as well, what did that look like as a process to be going through as it was all unfolding?
Well, thankfully, it was not such a significant amount. It didn't bankrupt me back then. I mean, I was still studying, so it still was painful, but I always followed the core principle of, hey, this is a risk asset. And today I think completely different, but back then it was a very risk asset and you only had a small amount in there. The way how it played off was like from one day to the other, you just couldn't withdraw it anymore. And I think you could trigger it or you could try and you just got an error message, but it just didn't work. So first you thought, maybe try later again. But then on Reddit, the posts came out that they are solvent, the money is gone, transactions have been posted, that Bitcoins have been moved. So I was like, not good. And then Bitcoin crashed and it was clear that this money is gone. So I wrote this off completely shortly afterwards. And I actually wrote Bitcoin off as well. I thought that the core promise of Bitcoin is broken, that even though you can hold your keys, if you wanted to use it at all, like I said earlier, then you had to trust someone else. Like even wallets were very simple back then, but there was no real use besides trading on centralized exchanges. Today, the options are a bit more, so you have non-custodial options, but it's still very limited. And it surprises me how many people have money on an exchange. It's crazy. It's really scary.
It is, man. It blows me away. And I always say the blessing and a curse, I guess, is my onboarding into Bitcoin was you self-custody your Bitcoin. And then I was also taught the fundamentals alongside that, which was an absolute blessing because for me it was Bitcoin only and it was straight into self-custody. There's no negotiations. The curse was I just assumed that everybody else had that onboarding into Bitcoin. So then when I started being more vocal in the space, I realized how wrong I was and how many people need help, and a mixture of want to take action but don't know what to do, terrified of it, and then the others that are just completely unaware of the risks. And then the worst category, in my opinion, are the ones that are aware of the risks and what's happened before, but think that it won't happen to them and their exchange. So before we move on, do you have anything to say potentially to those people that are either aware of the risks and just putting it off, or aware of the risks and saying it won't happen to me? Because I do think it's probably one of the most important topics for Bitcoiners to understand and realize the real risk.
Yeah, this pushing away the responsibility and saying, hey, this will not happen to me, this will not happen to my exchange. That's exactly that which will get you into trouble. Like, people thought Celsius, BlockFi, FTX are safe. Like as Sam, the SBF, I was like this wonder child, printing billions and billions of dollars. I envied him initially until I was like, that sounds too fishy. I had no idea that this will go bust. And we actually evaluated FTX as a platform if we want to trade on it, and then went with BitMEX instead, because I thought, let's go with a more established one than a newcomer. It was a good call because I had some money on a different exchange. You can't escape it completely. But to answer your question, the Bitcoin is the most precious asset. Keep it in self-custody. It's the core feature, it's the core idea. Censorship resistance, and you only get censorship resistance if you hold the keys and you don't have to ask for permissions. You really don't want to be in this situation where you like go to a centralized exchange and say, hey, I want to withdraw my money. And then suddenly, well, maybe please provide some more KYC. Tell us where you got the money from, what's your salary, what's your blood type. And then at the end of the day, they might still say no. Or worst case, they get hacked, or someone at the executive layer is malicious and just runs away with the money. So yes, you might need centralized exchanges, but you just keep it in your hardware wallet, in your cold storage for the time being, and only when you need to do something like trade it or sell it, then you send it to the exchange. But it's not, centralized exchanges are not storages. It's not a savings account.
Yeah, it's a great point, and that's really well laid out. And it is all sunshine and rainbows until it's not, and it's literally like that. It's a really serious thing to take ownership of and responsibility of. And yes, it's scary, but reach out for help. There's multiple people that can walk you through the process if you want help, and it's so important. I want to get into Lendasat and what you guys do and all of this, but for those listening that didn't even know you could borrow against your Bitcoin, what does that mean? How does the process work fundamentally for a normal person?
Yes. So the original idea comes from that you have a need for cash, for liquidity, and you have this asset which is quite worth something. So you bought Bitcoin some time ago or just now, and you don't want to sell it. Whatever reason you have, you don't want to sell it, but you need some cash. So you need to have this requirement that you need some cash. If you don't need cash, then you don't need to borrow against it. Selling Bitcoin means most countries, you have to pay capital gains tax. So many people write this off in the first place, and instead they try to look otherwise. And then you can take debt from other sources, but it's a different type of debt. So the way how I like to describe is that if you take a uncollateralized, unsecured loan from a bank, like a personal loan, you pay high interest, 10+%, but it's unsecured. And I describe this debt as bad because what you do is you borrow from your future you, and you have this high risk of, hey, if I lose my job, if I lose something else, I will not be able to pay this back. Bitcoin-backed loans is still debt, but it's better debt because you borrow actually from your past. You bought the Bitcoin already, you hold that asset, and now what you want to do is you want to tap into the liquidity. And today or a few years ago, the only option was to go to a centralized custodial platform where you could borrow against it. And a few of them blew up, BlockFi and Celsius being the biggest one. And we saw that there's this hole in the market where there's no non-custodial option out there, like borrowing against your Bitcoin without having to give up custody of your Bitcoin was not possible. And the way how it works on our platform is very simple. You lock up Bitcoin in a multisig, and then you get stablecoins or fiat in returns. And you have a loan expiry, like a duration. Let's say you want to have K for a year, then you lock up some Bitcoin in this multisig. We can talk about how much you need in a minute. But the core idea is you over collateralize it, and then at the end of the loan duration, you have to pay back the principal plus the interest, like how much you borrowed plus the interest, and then you get back your collateral.
Yeah, that's really well simply put. And so for just generally Bitcoin-backed loans, how does it actually work in terms of, let's just say we've got Bob who's got 1 Bitcoin and they want to access $20,000. What's the actual process on these centralized exchanges that they do? So they deposit the Bitcoin onto the exchange, they then send the Bitcoin, they then select the loan or whatever, they then the Bitcoin's on an exchange, so then the exchange custodies that Bitcoin, you can't send it or do anything with it from that point, it's locked up, and they release fiat to your exchange account, and then from there you can send that fiat wherever you want. Is that right?
Yeah, pretty much. So if you go to a custodial lending platform, you send them your Bitcoin. They have certain requirements on how much you can borrow against it. That's this loan to value ratio. On our platform, we have a 75 or a 50% LTV minimum as a default, meaning then 50% you can borrow half of how much you deposit. So if you say you deposit 1 Bitcoin at current rate, you can borrow around 40K in US dollars. So you put up that Bitcoin as a collateral, the centralized exchange holds it in custody, and then gives you the fiat. And that could be either credited to your exchange account directly or sent directly to your bank account.
Cool. And you touched on, obviously, the pro for this is people being able to access liquidity of the asset that they hold, being Bitcoin. What are the risks specifically now just for the centralized exchange and lending with a Strike or someone like this? What are the risks on the user that's going for these loans?
That is a good question because it's not without risk as much as I would love it to be without risk. There are quite a few different ones. I'm not saying our platform is the best, and there might be different solutions more suitable for others. When it comes to Bitcoin-backed loans, you need to do your own research, most importantly, and you need to look at the whole offering of that platform. That goes for custodial, centralized platforms, and also non-custodial ones like ours. And the way how I like to look at this is the founder, the founding team, people who run this platform, are they, I'm missing the word. Can you trust them? Do they show correct integrity? Are they credible? What's the credibility of these guys? Because if they promise you to never rehypothecate your Bitcoin, I'll mention it in a second what this means today, but suddenly from one day to the other, they change their opinion on this. Or if they say, hey, we have actually a non-custodial platform, and then from one day to the other, they change how the system works and it's suddenly a custodial platform. You really don't want that. You want to be sure that, hey, things are set in stone and they cannot easily change that. The other thing is, where are your Bitcoins? And there are some good custodial platforms or better custodial platforms which have like a long, trustworthy history. I personally would still not use them because it just means they have been running for a while without blowing up. But there are some which have been around for a while, like Laden, for example, Nidic in the Coinbase. And they have the setup for keeping the Bitcoin in custody without blowing up. Coinbase is very interesting because I believe that's going to be the biggest crash in history once Coinbase blows up, because they hold 60% of all Bitcoins held on an exchange. You can probably read up on where the Bitcoin are actually held. So you really want to be sure where are they held and what can they do it. Some exchanges offer you lower interest rates in return for rehypothecating your Bitcoin. And that means that you give them your Bitcoin and the right to use your Bitcoin. And what they usually do is they take your Bitcoin and then gamble it somewhere else. And that's super risky. That's basically what FTX did. They used the money from the users to gamble on some other things in DeFi space and then lost all the money. And you really don't want to be in that situation where you have paper Bitcoin on that exchange, but the Bitcoins are not there anymore. And then the interest rate is also very interesting. You really want to be sure about whether this is a dynamic interest. Is it fixed for a certain time period, or can it be changed easily, so that you really know what are the costs. And on top of that fee, usually what you have is an origination fee, which is an extra fee on the platform. So the interest rates usually goes to whoever gave the cash, the fiat, to the platform. And then the origination fee goes to the platform. Yeah, I forgot your question, but I was just answering some stuff.
No, yeah, that answers it perfectly. And I think that's probably enough for the education piece right now. So there'll probably be some more education come up as I ask you some more questions. But that's custodial lending as a solution. So the exchange, whoever you're using, holds your Bitcoin for you when you deposit it as collateral. So what you guys do is slightly different. I don't want to put words in your mouth. So do you want to go into a bit of detail around what you guys do that differentiates yourself from these custodial solutions?
Totally, yeah. Most, or if not all, custodial solutions have a single, they are the liquidity provider or borrow from someone else. It looks like you borrow from them directly. We are an open marketplace, meaning we allow lenders and borrowers to come in and create offers or request loans. So, for example, you could go in and say, hey, today I have too much Bitcoin. I want to borrow against it. Or at the peak of the bull run, you sold a little bit, you hold some cash, and then you want to earn some interest on that, and you can become a lender. So it's really a two-sided market where you have borrowers and lenders, and we just match them with each other. That's the core idea. And then the thing that you can borrow is still similar to, or the same as to centralized exchanges. You can borrow stable coins or fiat directly, and then you get it either in your wallet, your USDC, USDT, or you get it directly to your bank account. The core difference, though, what we do differently to custodial ones, is that we use a multi-sig approach, meaning no single party has full control over the keys, over your money. And the multi-sig is a 2 out of 3 multi-sig consisting out of the borrower, the lender, and the platform. And you always need 2 people to sign it. So it's a 2 out of 3 multi-sig. And in the happy case, the borrower and the lender to sign. Let's say the borrower paid back in time, lender is happy. Then the lender and the borrower collaborate and sign, and the borrower gets back his money. But if there's a dispute, if something goes south, like, for example, the lender initially didn't pay out enough, or the borrower didn't pay back enough, didn't pay back in time, then we can jump in and collaboratively spend the Bitcoin, either together with the borrower or together with the lender.
Cool. And I'm going to play devil's advocate a bit here, but what's to say I can deposit or put my Bitcoin into this multi-sig wallet, and how do I know that you guys as a third party are going to be fair in that exchange between lender borrower, and if there's a conflict?
Good. That is a real good question. So first, we have a cool tool. We call it the Doomsday software, which allows you to verify where your Bitcoins are held. So you have a mnemonic, like a seed phrase. You need to back this up, and then with some additional data, you can really verify where the Bitcoins are held, and you know, or you see the other keys in there. This tool also allows you to collaborate with the other party in case we ever disappear. That's very important, because what if a regulator suddenly decides, hey, we need to shut you guys down. You cannot operate anymore. You cannot offer your service, or I don't know, we get hacked, I die, whatever. Then this tool allows you as the borrower and the lender to collaborate and get back your money. Now, the second question was, how do you know that we act correctly or fair towards all players? The simple question is, it's trust-based. You need to trust us. But as long as you use, for example, stable coins, everything can be verified. Like, it's very easy to prove that either you as a borrower are in right or the lender is in right, because all blockchains are public and the transactions are visible to everyone. So let's say you paid back your loan. The lender said, hey, you were short a few $1,000s. I will not release the money. Then we can verify on chain that what you said is actually right. And then if the lender still does not collaborate, then the borrower and the lender can collaborate.
That all makes sense. And one last thing to play devil's advocate. What's to say that I deposit my Bitcoin into the multi-sig setup, and then you or someone from Lendasat are friends with the person providing liquidity, and as soon as my Bitcoin is deposited, then 2 of the 3 just go, yep, and then everything's gone.
Yeah, totally. Like, you could just assume that we are one of the lenders, right? And then we hold 2 of the 3 keys and we can disappear. We have two answers to that. One is, yes, we could do that, but we are probably dead afterwards, because again, you can prove that we did that, and once the trust has been misused once, people will not use us anymore. So there's an economic incentive from our side to not do that. We cannot target, like, if we want to make it worthwhile, our efforts, we would need to target all borrowers at the same time, which is quite some effort. So we would need to have quite some liquidity. Not impossible, still possible at tech. So you need to trust us. However, we have another solution, usually done for high net worth individuals or institutions, where we actually add another key into the set. And then the multisig becomes it gets a bit complex, a 2 out of 4 or a 3 out of 4 multisig. Meaning, in the happy case, it is, a 2 out of 4 or a 3 out of 4. Yeah. Happy case is the lender and the borrower. Everything is fine. But if there's a dispute, then it is us plus another third party. And what we have is like these Bitcoin custody provider like BitGo, Thea, and so on, which then offer that as an additional service and have another decision right on whether the Bitcoins can be released or not.
That makes sense. So we talked a bit about the risks of the custodial platform for the user. That was obviously one risk, that you're trusting other people with similar kind of to the custodial side of things. Are there any other risks that users need to be aware of to do their own research for this method instead of using the custodial approach?
Yes. Where should I start? I guess on top of the list is a technology risk. Besides trusting that the people are not stealing the money, you also trust that they don't make any technical mistakes and make the Bitcoin unspendable or something. Having worked in this space, these are the hard lessons you learn on building on Bitcoin, that you derived the wrong key, locked it up in an unspendable output, and the Bitcoin are basically just gone. It's going to be very hard to brute force which derivation path you used. So you really, again, it comes to the trust and the integrity of the platform providers, that they actually know what they are doing from a technical perspective. So you really want to be there. And the other thing is, you need to, if it's a non-custodial platform, the platform needs to provide you the means to actually spend it unilaterally. Like, you need to have a seed phrase or some form of private key you can extract and hold yourself. And you need to know or be certain that the platform has no copy of this. So again, you need to trust someone or read up how the platform actually generates the keys, and most importantly, keep a backup. Meaning, one risk there is, if you lose your backup of your keys, if it is in this multisig, yes, we have 2 out of 3 keys. We could theoretically recover it, but it's going to be way harder. And if then something really, really bad happens, the platform disappears, you lost your keys, then the Bitcoin are gone.
Yeah, that makes sense. Lots of risks to consider. And then I guess a risk that we haven't touched on, my understanding is that these lending platforms have like you said at the start, LTVs when you enter the loans, so the loan to value ratio of your Bitcoin versus the loan amount. What do these, obviously there's been loads of talk recently with what Bitcoin's price has been doing of people saying, I bet those that took loans out at 120 are not too happy right now after being sold the dream or whatever you want to call it. What are the risks or what are the numbers for getting liquidated and where things can go really wrong, even if all of the infrastructure on the back end is rock solid?
Yeah, I think that's one of the biggest risks in Bitcoin-backed loans, that people just over-leverage what they should be doing. They borrow against the Bitcoin at the peak of the bubble because they think, ooh, FOMO, I need to buy more Bitcoin. I don't want to sell my current ones. I borrow against the Bitcoin. I buy more Bitcoin with it, and now Bitcoin tanks. And the LTV is the loan to value ratio, means the amount, the total amount you owe, meaning the amount you borrowed plus the interest, over the value of your collateral. So if you borrowed 50K at 10% over a year, you need to put up 110K at a 50% LTV as a collateral. And that means it protects you at a price drop of roughly 50%, a little bit less because of the liquidation thresholds, but basically it allows the Bitcoin price to drop significantly. And you, as the borrower, you really need to monitor the Bitcoin price. And there are a few ways how you can increase, decrease, or improve your LTV. For example, you could pay back early, partially. That reduces the amount outstanding and reduces the LTV. Or you could add more collateral. So what you want to do when you take your first loan is don't go at the minimum LTV. Keep some space left. Like let's say you hold 10 Bitcoin. Don't use all 10 Bitcoin to borrow against it. Maybe take 4, 3, so that if the price really drops by 60, 70, 80%, you have some Bitcoin left to put up as a collateral additionally to not be forced to get liquidated. And the liquidation threshold, that totally depends on the platform. On our platform, we have a 3-step alert system. So we have a margin call at 80%, meaning you get an email, or if you have Telegram connected, a Telegram notification saying, hey, you're getting into a critical area of your LTV. Please consider paying back or adding more collateral. And then we have a second warning at 85%. And then at 90%, the lender can liquidate you. Now, the interesting thing is, initially we said you get liquidated immediately, but we saw that lenders are actually really nice people on this planet. They usually also believe that Bitcoin will go up again, and they don't want to hurt you, poor borrower. Particularly, this is the worst time to sell your Bitcoin, right? You get liquidated and you basically sell your Bitcoin. Bitcoin prices drop down. You probably have a capital gains tax event on top of that. So you really don't want to be in that situation. And lenders do understand that. And our platform allows the lender to liquidate, but they allow also to renegotiate with the borrower. And they could say, hey, you know what, I'll give you another 1 to 2 days, top up your collateral, pay back early, and I won't liquidate you. So they don't have to force liquidate you right away.
That's a cool feature. I like that. I just had this thought while you're speaking there, so I have no idea if it's possible or if people have ever tried to consider it. But let's say someone's listening and they've got a Bitcoin loan with Ledin or with Strike or whoever, one of the big custodial options, and they're thinking, oh, Lendasat sounds right up my street. 2 things. One, how do they get in contact with you to ask you these questions? But the other one is there an option where someone's got a loan with Strike, let's say, they decide they actually want to do the loan with you in the multi-sig? Is there a way that without paying off themselves that loan, the loan can be transferred from Strike or Ledin or whoever over to you guys? Is that a possibility?
Interesting. Yeah. I actually saw this offer the other way around, to platforms who have a lot of liquidity available, they offer people to transfer the loan over. And this, I think, bottom line, unless the platform trusts you, you will need to have additional Bitcoin as a collateral. Then you can easily do that. So the way from what you just described, the way how you would do it is, let's say you have 1 Bitcoin on the custodial platform, you want to pay back that loan, or you want to transfer that loan to Lendasat or other non-custodial platform, then the simplest solution is you need more Bitcoin, borrow on Lendasat or the other platform, and with that proceeding, you pay back your loan on the custodial platform. We don't have an atomic way of doing that, but we see doing something similar on our platform selves. Like, it's called perpetual loans. And the idea is that you actually never pay back your loan. And you do that with, if your loan expires, your current loan, you just take another loan and pay back the old loan. People just keep borrowing and never pay back the actual loan.
I think I've seen Moss talk about that quite a bit in terms of the retire on Bitcoin in 5 years or whatever, which is an interesting thing to think about for sure. So just to clarify, if I'm right on what you were just saying there isn't a way that, let's say, someone's got a loan with Ledin, they've got 0.5 Bitcoin posted as collateral. There isn't a way that your liquidity providers could cover the amount left to pay on that loan, take the Bitcoin into the multi-sig wallet, and then that loan rolls over. That's not a possibility right now.
Not easily, because we don't want to have an unsecured loan. So all our loans need to be over collateralized, meaning if you tap into the liquidity from some of our LPs, then you need to put up the Bitcoin as a collateral. But there are ways how you could do that. You could do it step by step. Let's say your loan is such a good LTV on Ledin, they actually allow you to withdraw excess collateral. And what you do is, let's say you have on your 1 Bitcoin, you have borrowed BK, you withdraw quite a bit, and then you borrow on our platform, pay back a little bit, you decrease the LTV, and then you just rinse and compete. But we don't have a simple flow for this right now.
Is there anything that I haven't asked that perhaps will be useful for people to know or to consider?
Yes, and that is the fine print. Depending on your jurisdiction, tax law can get quite complex. So the ATO in Australia has a guideline on how tax, when are a CGT events, like when do you have to pay tax. And the guideline is very simple. As long as the Bitcoin you put up doesn't get mixed with another Bitcoin and is not controlled by another party, there is no CGT event. There's no capital gains tax event. This gets tricky. First, we had a legal opinion with some lawyers here in Australia who told us that the ATO never so far charged anyone on this. So far, they go with self-reporting. So you as the individual or entity, you have to report what you did with your Bitcoin. However, for example, if you use Aave or Compound on Ethereum, where you put up your Bitcoin in a pool, you get back different Bitcoin at the end of the loan, and you have a tax event. And that defeats the whole purpose of borrowing against it, because you have a tax event when you put up the Bitcoin as a collateral, and you have one when you get it back. The most solutions we talked about so far, the custodial ones and the non-custodial ones, usually it's not the case. However, it heavily depends on the terms of services of the platform. Particularly, they have to state who is the ultimate beneficiary owner of those Bitcoin. And if you, as the original owner, it's not your Bitcoin anymore, then they might have a case for, hey, you actually got rid of your Bitcoin and you just got it back eventually. Then there might have been a taxable event.
Yeah, that's a really interesting one to consider. So depending on where you are and who you use, you could effectively face double capital gains tax, and you didn't even sell your Bitcoin.
Yes. So I don't know anyone where this ever happened, but according to the law or the guidelines from the ATO, this is how it is.
Yeah, that's definitely worth people considering. I'm going to hand it over to you to finish us off.
Thank you. Well, first, Bitcoin-backed loans is a beautiful, very useful thing. So if you have the need for cash, please consider Lendasat. My DMs are open. You can talk to us. You can also Google my name and Google the team. We've been in this space, building in this space for years. And hands down, so far, we never got hacked and never lost any Bitcoins because of any technical solution, technical mistakes. So you can really consider it, but do your own research. There might be other platforms more suitable for you. If you don't have a need for Bitcoin, like that's actually really interesting as well, but you have an excess of cash or you have the possibility to access cash cheaply. For example, you have some investment properties, Airbnbs or something where you can easily borrow against it. Then you can arbitrage the interest rate market and lend it out on our peer-to-peer platform. For example, if you have a mortgage, you borrow from the bank at 6%. Bitcoin loans are much higher these days. They start at 8 and go up to 12%. So you can really make a living from arbitraging interest rates. And I said, if you are lending, be kind to the borrower. If the price drops, don't liquidate them immediately. I mean, it is an opportunity for you to acquire cheap Bitcoin, but just think of the other side. You wouldn't want it any other way if you're on the borrower side. So be kind, but there is a huge opportunity to lend out and also to borrow.
Just one quick question on that. Why do you think the interest rates for Bitcoin are so high, considering it is so liquid and such a good asset to loan or to lend against, compared to something like housing or other assets where the interest rates are lower? What's the reason for that?
My understanding is that Bitcoin is still seen as a risk asset, and banks, while some banks getting into this space now, don't know how to value it yet. I think there has been news in Australia that one of the major banks is going to offer it, but bottom line is, from an accounting perspective, there is no guideline on how to value Bitcoin. And banks have to have a certain amount of money on their balance sheet compared to how much they can lend out. Now, think of they have 100K in cash sitting. They give you a loan for your house. Everyone knows how to value houses. It's easy to now have a house on their balance sheet. If they put up Bitcoin, what it means today is if they hold your Bitcoin, they don't know how to value Bitcoin and they have to set it to 0. And suddenly they have a 100K hole in the balance sheet. That's the reason why banks haven't come into this space yet. And that means interest rates are much higher because you're really, really far away from where the money printer sits. And then it's just interest rate arbitrage. For example, the use case I told you earlier, that's, I think, one of the ones where you can get really, really good rates, but they have to pay their accounting fees, the taxes. It has to be worthwhile, the arbitrage, and then they just add it on top of whatever they get.
And so do you foresee a future where banks are offering lending solutions and starting to understand Bitcoin? We're seeing in the US at the moment that obviously banks are kind of starting to bend the knee to Bitcoin, that this is going to then create a competitive market and environment where interest rates to borrow against your Bitcoin just trend towards 0 from where they are now?
Totally. And it's happening today. It's like the Signum Bank in Switzerland is one of the big players in this space who offer really, really low interest rates. They are very, very close to where the money comes from. But will just be very, very competitive. So on one hand, looking forward to that because interest rates will come down. But it also means that you suddenly have some players in the market which you, as a Bitcoiner, usually didn't want to trust in the first place. And now you have to give you a hard-earned Bitcoin to a bank. I don't know if I would want to do that. And as you know, banks have fractional reserve banking, meaning they don't have to have over-collateralization. You might risk bank runs. You might risk rehypothecations of your Bitcoin, or it's a different story. When banks come in, they definitely will push down the interest rates.
Yeah, and then the paper Bitcoin story continues to evolve and probably speeds up drastically. So
Yes.
Guys, if you're listening, self-custody your Bitcoin, and if you are going to borrow against your Bitcoin, do your own research, understand the risks. There's pros and cons to everything. It's not all sunshine and rainbows, as hopefully you've understood on this episode. Philipp, where can everyone find you if they want to get in contact?
On most social media platforms, actually on Twitter mostly with the handle Bonomat, but also on Nostr under Bonomat. And my DMs are usually open. So if you have any questions, please just drop me a message.
Awesome. Cool. I'll drop them in the description below. Philipp, it's been awesome to have you on and to chat all things Bitcoin-backed loans and Bitcoin self-custody. So thanks for jumping on. And guys, I'll see you on the next one.